Hey guys, Max here, and we're back again for yesterday, the 22nd of January's daily update. It was a Saturday, markets were closed, but there was still quite a lot going on and plenty to talk about, so let's just get right into it. Now, to start us off, as usual for the weekend, what happened in the crypto markets while traditional finance markets were closed for the day? Well, crypto obviously had an awful time prior to yesterday, but it actually had a pretty solid day yesterday alone. Now, let's be clear, this was not even close to being enough to erase the gains seen over the week prior, but the crypto markets are at least not continuing to fall as the rest of the markets are closed. Bitcoin rose a modest 2% for the day and is currently hovering around $36,000. Ethereum rose about 4% on the day and is currently sitting at about $2,500. Obviously, yes, these levels are still far below what they were a week before. Bitcoin was sitting around $43,000 when I left at the beginning of the week, so the trend is still certainly downwards. The day before yesterday as well, Bitcoin pretty much touched $34,000 but didn't quite break below it. That does mean that we have now seen Bitcoin fall more than 50% from its all-time highs just a couple months ago. Now, for the rest of the crypto sphere, for the altcoins, it was actually a really positive day. But again, this comes after a far more negative week. Most altcoins rose anywhere from 5% to 25% as this little rebound occurred as crypto had its time to shine. Cardano was up 14%, Solana was up 5%, Luna was up 20%, and even some meme coins had a good day with Doge up 20% and Shiba up 22%. Now, if you remember last weekend, I think I spoke a little bit about the correlation between the crypto markets and traditional financial markets and how that works when normal markets are closed for the weekend. Basically, what I've been seeing over recent months is that crypto is hugely dependent on investor risk sentiment as its popularity has grown so much recently. The idea that crypto is still a niche investment and that we're all super early adopters just doesn't stand up to reason in my opinion. I mean, Bloomberg have a crypto tab for all news crypto and everyone and their mum has heard of Bitcoin, Ethereum and even Dogecoin at this point. What we are seeing and what most people are now admitting is that crypto is a risk-on asset that reacts to fears regarding domestic US politics, worldwide politics, and things like the Fed's tightening procedures in basically the same way the super hypey tech stocks like SoFi and Peloton do as well. Now, when the weekend comes, however, and crypto is the only market still open, this tether between the two markets, and I'm not talking about USDT here, but that tether seems to be broken, and the crypto markets move on their own initiative. For example, Solana had another bad day as it has been basically shut down for days now. It's a very centralized protocol, one that has had loads of problems, so their competitors like Cardano rose 14% for the day, while Solana only rose 5%. It is possible that the crypto market over the weekend could turn into a bellwether for the more traditional financial markets and act as a sort of sentiment index for high growth risky Nasdaq companies, but this is all far too early to make any concrete claims about this. I will of course be looking at how crypto performs for the rest of the day and then looking at how smaller companies on the Nasdaq do on Monday when everything opens up again, and then I'll be looking at the same thing next weekend and the weekend after that and so on. This really isn't anything concrete so far, nothing sure at all, but it could turn into something, so I'll keep you all updated on how this looks in the future. Now back to Ukraine, as once again there have been some developments, but I also want to clarify my position on the whole issue. Now, I firmly believe in the right to self-determination. That means that if the people of Ukraine want to remain part of Ukraine and not be invaded by Russia and ruled over by a dictator, they should be able to do that. If, on the other hand, the people of Ukraine wanted to be invaded by Russia and ruled over by a dictator, then that would be their prerogative and the West should not stop that from happening. Russia does not get to decide this, despite what the morally bankrupt commenters below this video will tell you. Also, if Estonia, Latvia and Lithuania want to join NATO, which they did, then they should be able to do that. Russia's feelings do not matter when we're talking about sovereign countries. The inability for the people who support Russia in this dispute to recognize when a dictator is eroding away the sovereignty of other countries is ridiculous. Russia invaded Crimea, Russia invaded the east of Ukraine as well. They are the aggressor. It really is that simple. Russia is now complaining that Sweden and Finland are thinking about joining NATO when they are considering this because of their fear of Russia, because of what they are doing in Ukraine. What's more, Germany's failure to stand up for other sovereign nations is shameful and a move of utter self-interest. Those of you who are triggered by what I've just said, who are upset that I don't agree with Big Bad Putin, who are about to leave a comment telling me to stick to finance and economics and not to talk about geopolitics, you might as well just leave the channel now. It is my channel and I'll talk about what I want to talk about. I've spoken about morality on this channel 1,000 times before this in regards to Hong Kong and Xinjiang and the erosion of human rights in China, in regards to corruption in the US and insider trading by public officials, in regards to restrictions put in place in the UK and the monopolization of policy by those who support a COVID-0 strategy. None of you complained when I spoke about the misdoings or immorality in those instances, but now you cry that I'm a Western pig when I call out Russia for their abhorrent deeds. Look at yourself in the mirror, stand against evil wherever it lies. Support the Ukrainian people's right to self-determination, regardless of what their desires are. And now that my little rant is done, then what are the developments in Ukraine? Well, basically, there is a lot of back and forth going on between Russia and the West about who is really stoking tensions, with Russia recently claiming that it is the West who is the problem. Now, this just doesn't stand up to facts at all. Russia invaded Crimea in 2014, they invaded East Ukraine in 2015, they fostered a paramilitary force that has been fighting against Ukrainian authorities ever since 2015 as well. Russia started to build up troops and tanks on the Ukrainian border last year. Everything the West has done here is in response to Russia's aggression. If you can't see that, then I really can't help you. More aid is now being provided to Ukraine by the West in the form of weapons by the US that are being flown over. Support has already come over from the UK as well, and there's been lots of diplomatic mentions of support from Western nations as well. Ukrainian paramilitary forces, the same ones that have been fighting in Donbass for years now, are preparing for more conflict with Russians. They're rebuilding forces as there are now over 100,000 Russian troops sitting on the border, apparently just watching and not doing anything else. Now, one of the major concerns around all this, and actually the reasons Germany is behaving so cowardly, is the fear that natural gas supply will be throttled further by Russia, exacerbating the already tough energy crisis in Europe. On this front, there is some bad news. In France, a huge nuclear operator called Électricité de France, sorry, I don't speak French, so I know that was awful, but anyway, that company is having technical problems and is set to produce the smallest amount of energy in 3 decades. It's unlikely that France is going to be able to export power to its neighbours, which lots of other countries usually rely on. These countries and France as well are already struggling under high natural gas prices, so this isn't good news at all. Electricity prices look likely to rise, which is bad for people, bad for inflation, bad for the European Central Bank, and just bad all around. Now, from Europe and over to the US, what's going on? Well, of course, I missed a few days this week, including some very red days for US tech stocks indeed. Nasdaq listed companies, you all know the type. Morgan Stanley has come out and said that they don't think people should be rushing to buy this dip. Basically, they think the dip is going to keep on dipping. They think this new trend is going to last a long time and it's actually going to be mostly downhill. And to be fair, I agree with them, but with one major caveat. Almost everything here depends on what the Fed does. If this dip continues and it turns into a 30% decline on the Nasdaq and maybe a 20% decline on the S&P 500, maybe the Fed loses its nerve and turns back on tapering and interest rate hikes. Now, if the Fed sticks with this path, then there is one direction, and that is downwards. But we've seen Powell dedicate his tenure not to reducing unemployment and not to fighting inflation either, but to maintaining high asset prices. And I'm not so sure that he is going to hold firm and stick with this new direction as asset prices are collapsing across the board. Now, if the Fed does do a 180 once more, then the big fears will shift from falling tech valuations to soaring inflation, and portfolios will likely have to be adjusted, something that I've already started to hedge against just a little bit, just in case. Right now, the markets think the Fed is sticking with their direction. They are all calling for an interest rate rise in March, and Goldman Sachs, for example, is calling for an interest rate rise at every meeting after March as well. There are, of course, other concerns around the world right now. China's economy is still having an awful time of it, and if Germany's economic data comes out this week to show another contraction in GDP, which is what most economists are predicting, then Germany will officially be in a recession, which is, of course, bad news for Europe as it's the largest country in the continent. Now, speaking of China, what's going on over there? Well, they've seen some limited optimism on a couple apparent rallies on otherwise suffering sectors. In my opinion though, this does seem very likely to be a bull trap. The Hang Seng Index, for example, is up 6% since the start of the year, but it's still down 7% from 6 months ago and 20% from a year ago. The optimism here isn't quite justified yet. There have also been problems in China emerging. The largest property developer in China, Country Garden, saw its bond prices collapse as they failed to raise some capital that they needed, and it's looking pretty certain they're headed in the same direction as Evergrande and every other property developer in China. COVID is not getting any better in China either. A bunch of cities are being shut down to try and stop the spread of the virus, but as is the nature of COVID, the country will never get rid of it all. On top of that, their vaccines, the Sinovac ones, they just don't work against Omicron, so they don't really have an end in sight either. Hong Kong might actually be the next target for a lockdown, a full-on lockdown as well, as cases are starting to rise rapidly over there as well. In terms of the housing market, well, house prices across China are still falling month by month, as is consumer sentiment as well, so the economy is not going to be growing by nearly as much as the CCP would have liked. Personally, I really don't see any cause for celebration here. Hong Kong-based Genting, a cruise operator, is about to go into liquidation. The company has no more cash, no way to raise any cash, and is bleeding money at a crazy rate. The company is dead, quite literally, in the water. The only good thing happening in China right now is a small stock market rally, but in the grand scheme of things, that stock market rally isn't enough to erase even half of the losses that the market saw over the last year. Now that is pretty much it for the day. I am putting together a quick video on Netflix explaining the drop recently, and that should be out either later today or maybe tomorrow. I actually held a poll on the Patreon and Netflix one, so if you want to vote on those polls, then check out the Patreon down below. Coinbase was a close second, so I'll be putting that video out a day or two later. If you enjoyed this video, then leave a like and a comment to bless the YouTube algorithm. If you want more content like this, then check out our Patreon and join our community of investors. You get access to our Discord, loads of exclusive content like insight into my portfolio, and buy and sell alerts for all my own investments. There's a link in the description to masterworks.io, a site that allows you to buy fractional shares of art from world famous artists like Banksy, which can be a great way to diversify your portfolio with non-market correlated assets. It's completely free to sign up, you don't have to buy anything, you don't have to hand over any card information, so if that sounds interesting, then make sure to check it out. There's also a link in the description to BLOCKFI, which will give you up to $250 in free Bitcoin when you use it. You can also get 9% interest on stablecoins like USDC, which is a far higher rate than you get from any savings account these days. Just make sure not to use Tether. Thank you all for the support, thanks for watching, stay stoic, until next time.